Morning, everyone, and welcome to today's session. And this one's especially for all the active traders out there. So, today we have Mr. Rajandran R, who's the creator of OpenAlgo. If you've been trading using just price and volume, you might be missing a big piece of the puzzle, which is market depth. And today, we're going to go beyond the basics, diving into what L1, L2, and even L5 plus levels really mean, and how tools like the TBT, which is tick by tick data, can give you a serious edge, especially in the fast moving markets. We'll break down concepts like order book patterns, 50 level market depth, and how to actually read and act on this data. Plus, what market depth doesn't tell you and how to avoid getting misled. So, over to you, sir.
Hey, thank you, Jeffrey. Thank you for the quick introduction. In today's session, right, what we will be exploring is like how one can make use of FYERS 50 depth and what is the importance of the TBT feeds and a lot more technical details and a lot of myth we're gonna bust in this specific session, right? I hope my audio and video quality is good enough to kickstart. If you
It is,
get
it is.
Okay, great. Thank you, Jeffrey. So let's, without any further delay, let's quickly kickstart over here, right? So this is something I've been saying in almost every session here. So basically, indicators, right, doesn't move the markets. Basically, money moves the markets, not the indicators. Indicators are a simple formula which is derived on top of price, or it could be on top of volume. Mostly, it is derived on top of the price. So the indicators, right, by itself, it doesn't has any brain to predict the future on its own. Maybe there are some high probability indicators. I'm not against indicators. I also use indicators as some sort of an trend following tools or some mean reversion tools. But indicators are never meant to predict the markets, right? So indicators will not say what can happen or what will happen in the future. But if in case if you want to understand the markets very deeply, you need to know how the money is moving through the markets, right? So that is where the market depth and order flow kind of tools comes in. So today's session is also going to revolve around that concept. So in today's session, primarily we're going to talk about basically the different types of data feeds which is provided, which you can access across the charting platforms or brokers, or even we're going to talk about the FYERS TBT feeds as well. And we're going to talk about how you can access the TBT feeds in FYERS via terminal, via your trading terminal or from your APIs, which Fire provides. And we will be learning how to interpret this 50 depth market feeds, right? So it's a gigantic feeds, like how we can interpret it. And then we're also going to compare the difference between order flow and order book dynamics, like what does an order flow means, and how the order flow looks like, and how the order book dynamics looks like. So what are the metrics that I should be knowing about order book dynamics? And then end of the day, the key takeaway is like some actionable trading insights from the market depth, 50 market depth, how I can make use of the 50 market depth on a day-to-day basis. That's a end key takeaway. So don't miss out the session so the strategy will be talking at the end. And a strong disclaimer, whatever that we are talking here, it's not an buy or sell kind of indications, right? So I'm not here to provide any calls, but primarily my job is to educate you on how to make use of the 50 market depth to the core, right? So probably this is a L1 data feed. Probably you would have seen in many charting platforms like AMI Broker, TradingView, right? So they do provide this top one bid and ask levels, and typically you will also get the open, high, low, close as well. So majority of the retail level charting applications, right? So they use it. Ninja Trader, AMI Broker, TradingView. Everyone uses the L1 data feeds. And you can also use L1 data feed to construct an order flow as well, right? So what it doesn't reveals is like it doesn't reveals what is happening inside the markets. So every day when the market opens, right, a big battle happens between the buyers and sellers. They'll be fighting against each other. So basically, practically, you don't see the battle, what is happening inside the battle. But then if you zoom it into one step closer, right, you will be getting into the L2 data feed. In the L2 data feed, probably you will not be seeing the complete battle, but you'll be seeing the frontliners, right? So only the frontliners who is fighting in the battle, and probably you'll be seeing the top five bid and ask levels. So they are nothing but pending limit orders. So whatever that the top five bid and ask levels, they are nothing but pending limit orders. They don't move the markets, but they have a strong impact on the markets. Majority of the institutional traders, they love to trade using limit orders than the market orders. So probably if you would have seen the recent Jane Street saga, they used limit orders, the punch limit orders, and then they also moved the market as well. Generally, limit orders are generally used by institutions for accumulation and distribution purpose, right? But maybe if you are crossing the bid or crossing the ask, your limit orders can be executed like a market orders as well. So L2 data feeds, you can see across 95% of the brokers in the country, they provide L2 data feed, and it is provided by the exchange at free of cost to the exchange members. Like brokers, they get it at free of cost as part of their brokership. And next comes the L3 data feed. L3 data feed, you can get up to like top 20 levels of market depth is what you will be able to see. So maybe here you will be able to see like 20% of the battle, you will be able to see how the 20% of the battle is fighting. So that you will be able to see from the order book. And the limitation is like very few brokers are providing, not every brokers are providing it. And then comes the TBT feeds, tick by tick data feed. That's ultimate feeds that exchange provides. Traditionally, high frequency traders, right? HFT traders are the one who make use of these feeds, right? So they don't. It's more of an institutional tool, but it is not institutional tool anymore, right? Earlier it was an institutional tool where you get to see almost every depth across the particular trading instrument. And FYERS, they provide up to 50 depth. Maybe FYERS will be having complete access, but it is very difficult to stream in the internet. So what they do is what they are doing is like they are providing up to top 50 depth is what they are providing here. And you can see most of the battles, complete visibility of the markets. So complete transparency of the market, what is exactly happening in the markets, you will be able to see. Now, one thing you need to understand here, if you are watching in NSE exchange, right, still you're not going to see the complete battle because still 90% of the quantity can be hidden, right? So they don't reveal, big traders, they don't reveal their execution. So in NSE, there is a facility when you're placing order, you can hide 90% of your order. You can hide up to 90% of your order. But when it comes to NFO, whatever you are seeing in the order book, right? Whatever you are seeing in the order book, it's a complete transparency. In NFO, you cannot place an hidden orders. NSE doesn't supports hidden orders, by the way. So, which means whatever the numbers that you are seeing, whatever the lot size that you are seeing, they are the true representation of the pending orders over here. Now, how it is going to be useful for me? It provides you comprehensive details about the markets. And one major problem with the other feeds are like, so if you take L1 feeds or L2 feeds or L3 feeds, so they are nothing but merely a snapshot feeds. They are taken as a snapshot every 1 second. Every 1 second, the snapshot feeds. Maybe the L3 feeds could be slightly different, maybe some 500 milliseconds or something like that. But they are not exactly a real-time feed. When any order modification or order cancellation or any new orders are coming in, instantly it will not be visible. So it takes slightly a little bit of time to reflect in the order book. Whereas TBD feeds, maybe to compare, right? To give a simple analogy, I can say like you can consider this L1 feed as like a 2 megapixel camera. Probably we can say like L2 feed we can consider as like 5 megapixel camera, and probably we can say like level 3 feed we can consider like an 10 megapixel camera. Maybe we can say like tick by tick feed, it's like 100 megapixel camera, something like that. So you'll get to see the clarity of the market will be very interesting at the TBD levels. And who can make use of this tool is primarily if you are a very active trader and you want to place a huge amount of let's say you are trading in options and Nifty options or Bank Nifty options, and you want to see how the fill is happening, how my execution fill is going to happen. Let's say I'm going to punch like 3.5 lakhs quantity of options, right? I'm just giving an example, right? It could be 3.5 lakhs quantity, or maybe like 1,000 lots of options that you're going to punch. So when you are dealing with a very huge size, you want to estimate a fill. Let's say you're going to send a market order, right? So let's say the price of premium is like right now it is trading at 200, and now you are expecting a fill between anywhere between 200 to 202. So you want a fill between 200 to 202, and you are in urgency to send an order. So in that case, you can see the range, you can see the liquidity. Basically, what you are seeing, these pending orders, we call it as a liquidity, right? So we can practically see the liquidity in the markets and we can execute it, right? That is one interesting thing. The second important thing is like, maybe if you want to trade penny stocks, right? You want to see what could be my impact cost. If I'm gonna send an order, you will be end up sometimes you'll be end up getting costlier execution. If you don't know the penny stock will be having a very thin liquidity. So you can see the market depth as an liquidity flow. You can see practically, you can see the liquidity flow, and you can use that to take advantage of it. If the liquidity is very thin, you can get into a bargain mode. If the liquidity is very high, maybe if you want to trade instantly, you can go and get it. The same thing applicable for stock options also. Many stock options in NSE F&O segment, right? So practically it is a very low liquidity segment. So it is not a good idea to send up market orders. So such kind of times you may have to see through the liquidity, see the market depth. Even if you want to acquire large quantity, you have to get into some sort of a negotiation mode, get into place limit orders and then try to negotiate it. So for those people, it will be helpful. And from a scalper point of view, scalper, if you're a scalper or an intraday trader, and you'll be able to estimate the market mood, market sentiment by looking into the uh, by looking into this various order flow metrics. So a lot of order flow metrics are the order flow imbalance and some of the order book dynamic metrics. So all those things will be helpful for a trader to understand the markets even much better. Maybe I'll show you those metrics in our coming slides. So as I said, majority of the L1, L2, L3 feeds are like most of the L1 and L2 feeds are like 1 second consolidated snapshot code. That's what Exchange provides. Exchange is still providing the legacy feeds from the L1 and L2 point of view. So means whatever the information that I am receiving in my L1 or L2 feeds, right? The top 5 bid and ask level, or the AMI broker codes, or Ninja Trader, or TradingView, every tick whatever I'm getting is like snapshotted at every 1 second only. You're just seeing the picture of, let's say I'm having a camera, I'm just looking into the actual market scenario, and then I'm taking a screenshot every 1 second. That every 1 second screenshot is what you are seeing in the L1 or L2 or even L3 feeds also. It's kind of a snapshot code what brokers are publishing, but not the TBD feeds. TBD feeds practically it gives you an clear real-time data. Every transaction is recorded, every order cancellation, every order modification, everything is recorded over here, right? It's like you're seeing a continuous recording video. There's no interception at all. So you're not snapshotting. Basically, you're seeing a complete stream of a real-time video. Something that's what, in other terms, we can say like it's a true representation of the markets. So the practical challenge is like maybe if you are going to use L1, L2, or L3 feeds, sometimes when the market is highly volatile, you may not be able to capture the true candlestick chart. Sometimes people will be complaining that, hey, my highs and lows are not matching. So that scenarios will not be there if you're going to use an HFT as your charting. So you will be having an accurate open, high, low, close, and practically you don't find the mismatch. Generally, mismatch happens when suddenly when the market is getting more volatile, right? So that results in incomplete, inaccurate candlestick calculations because you are using a snapshot feed. It's not within that microseconds or millisecond. Suddenly, there could be any fast spike. A regular market, you're not going to see any issues, but sometimes, let's say, like when there is some RB policy announcements or So suddenly some Trump is announcing certain things. So when the market goes crazy, right? Sudden market shot up. Our opening time, sometimes open high low close may not mismatch. Such kind of problems will not be there with the HFT feeds, right? So that is one of the major advantage. And a little bit of basics here, right? We can classify the order types into two different order types. One is active orders, another one is like passive orders. Active orders basically they move the markets. Basically, an active orders can be a market order, or an active order can be a limit order if I am placing it beyond the bid or ask, right? So let's say if Reliance is trading at 1450, if I'm going to keep my buy order above 1450, it's going to execute not like a market order, it's going to execute like a it's not going to execute like a limit order, it's going to execute like a market order only. So with the moment I'm going to cross the spread, right? If I'm the moment I'm going to cross my spread, even my limit order will be executed like a market order. And market order, I'll be able to visualize only after the execution. Maybe if you're going to use some tools like let's say like you're going to use tools like order flow, you're going to visualize it on once the order got executed. So let's say I'm just trying to send an order. Let's say I'm buying 100 shares of Reliance here. So I'm going to place it to my broker platform. And from the broker, the order will be sitting, it goes to the exchange, and the exchange has the order matching engine. The primary job of the exchange is to match the orders, right? So it's like a matrimony portal where the bride and bridegroom, they meet. The exchange matches the buyers and sellers on a daily basis. Buyers and sellers, they come together, so exchange does the job of matchmaking, right? So it's like kind of a matrimony portal. It makes the marriage between buyers and sellers, and that keeps on happening every milliseconds. So think about that. There is 100 shares. I'm sending an order. So basically, the market order is the one which moves the markets, right? It controls the price action. It creates the price action. In fact, so I will not say control the price action, but it creates the price action. Now, what is so interesting about is like it takes the liquidity from the markets. So it is more of a liquidity taker. So the 100 shares of Reliance, if I'm going to punch, it will look on the sell side. So the sell side, whoever is available, so 80 quantity over here and 20 quantity over here. So current price is 1445. So I'm going to take another 1445 quantity from 80. 80 quantity, I'm going to take it from 1445, and remaining 20 quantity, I'm going to take it from 1446. So I am the one who is placing the market order. I am the one who is moving the markets from 1445 to 1446. So the new LTP price will be changing from 1445 to 1446. So market orders, they move the markets, right? So that is one interesting, one important information. Many people think probably the top five levels or top 50 levels, whatever I'm seeing, they are the one who is moving the market. Those buyers and sellers, whatever you're seeing, they are nothing to do with the price action. They can control the velocity of the price action, but they cannot create the price action. Whatever you are seeing in the order book is just the pending orders, right? But passive orders, the limit orders, whatever you are seeing in the market 50 depth, right? So they are nothing but an liquidity providers. They provide liquidity to the order book, and they're just simply waiting for the fill. They can control the velocity of the price action. So if it means, let's say I'm an institution, if I want to create an resistance or a support, real-time resistance or real-time support, whenever I want to create, whenever I want to arrest the fall, I can do some sort of techniques like absorption kind of techniques. So I can float a huge ceiling. I can create a ceiling effect, or I can also create a full floor effect as well. Like I can create a support by keep on continuously pumping the limit orders at the certain zone of price action levels. Maybe if you're a price action trader, you know how the support and levels are getting created using the pending orders. The same concept over here, right? So if mostly the traders who are having big money, they can create unlimited uh, limit orders. They can float unlimited limit orders, and they can practically they can arrest even when there is a huge fall, when there is a huge panic. You can see like sometimes the market reverses. So such kind of places, right, the institutions will be coming, and the smart money practically they will come and do the support, or they build resistance around that level. Now here is a simple example between how the passive order and how the active order works. So the same similar concept over here. Let's say Reliance. This is a pretty old example, but still it makes sense. If I'm going to submit an passive order, now what it does is like it goes and sits in the exchange. So before, let's say like the price is like 2898, which is like 150 quantity. I'm going to submit another 100 more quantity. So after that, it is going to add more to the liquidity. Already I'm having 150 liquidity at 2898, but since I'm sending another 100 more quantity, it's going to add 100 more quantity. So practically it's only going to sit in the markets. It is not going to move the markets. So more, I'm a liquidity provider. If I'm supplying a liquidity, I'm more of a liquidity provider. So most of the market makers, arbitrageurs in the markets, the HFT traders, right? Or even there are people who do cash futures arbitrage kind of players. So they provide liquidity to the markets. Institutions, whenever they are accumulating, distributing, they act like a more of a liquidity providers. And if I'm gonna place an market order instead, right? I'm gonna act like a liquidity consumer. I take liquidity. I'm a more of a market taker, right? So there are market takers and there are market makers, right? Market makers provide liquidity. And there is another major consumption, major myth what people do see is like if I'm gonna see the 50 depth, I can see the everybody's stop loss. So somehow the HFT traders are seeing their stop loss. Now I would like to say like that is completely wrong. Exchange provides two different types of order book. One is a regular order book. That's what exchange called as a regular lot book. And then second one is a stop loss book. So the stop loss book is where all your SL orders, stop loss limit orders, and stop loss market orders are kept over here. See, it works on the trigger based mechanism. As long as the trigger price is not touched, your orders are not going to get visible anywhere, right? It's completely safe. Nobody is going to look into your order book. Maybe there are institutions, they have a mechanism to anticipate where the retail stop loss can be. Once in a while, it can be hunted, but not on a daily basis, right? But the stop loss book is something which exchange provides so that you're not going to see any stop loss in the 50 depth, right? This is a basic misconception. Many people are saying, if I'm going to look through the 20 depth or 30 depth or 50 depth, I can see the somebody else stop loss, right? So you're not going to see anybody else stop loss. Always you're going to see only the pending orders. Stop loss order, the stop loss limit orders or stop loss market orders, you're not going to see anywhere else. And regular order book, so they are visible limit orders only, it is shown. You're not going to see the hidden orders. Like hidden orders are practically possible in NSE, currency derivatives, and also MCX as well. But when it comes to NSE F&O, there's no concept of hidden orders. But still, institutions they hide their orders at their side. So they will send smaller orders. Once the smaller order got filled, again they send another smaller order. But so practically at any given point in time, even if I am an institution, I would like to execute, let's say 1 lakh of quantity. I would not like to reveal myself that I am a big guy, I'm sitting there, right? Because it's gonna create a huge cost to me, and people can go and trade against me. People can do front running me. So to avoid that, even if I'm an institution, let's say if I'm an FIERS or DIA, I will be going through the route of DMA, where in the DMA, first I'll be sending a small chunk of order. When the order got filled, the order, whatever the order I'm sending to the exchange will be showing it if it is F&O, right? Completely, it will be sending it. So once the order is filled, instantly, the next millisecond, I'll be sending in another order, and I'll be waiting for that fill. If that fill is filled, again I'll be filling it again. So which is what practically we call it as an iceberg order, right? So these iceberg orders you can detect if you are having some pretty good gold coding skills. You can detect whether there is an iceberg orders are there or not. You can practically there are coding techniques, or you can also use ChatGPT kind of tools to build your own iceberg order detection mechanisms, right? So the myth is stop loss book, nobody can see it, not even HFT, not even the brokers, except you who placed the stop loss order. Other than you, nobody else can see it, right? All right, so now where I can see the complete market depth, right? There are two ways you can see it. One is from the FYERS platform itself. You can go to fyers.in/web/charts. So basically, you can go and open the charts in a full screen. From there, you can go and watch the depth. So it's very difficult to see the depth in one shot, but you can scroll it down, you can able to see it very quickly, you can able to see it over here, right? So up to 50 depth, you'll be able to see. If in case you're not comfortable, you can also, I think you can also minimize it to the 5 depth as well. This is from the, if you're going to use the charting platform, right? So you can practically, you can see that, you can see the price action, which is ticking on the upper side. Let's say I'll go to something like 5-second charts, right? This is 5-second charts of Nifty futures. So if there's something called an uptick downtick kind of method, like whenever the price is pushing up, you can see the price pushed up, somebody pushed the market order. When the price is ticking down, somebody is pushing the market order on the sell side. So this is what we call as a two-way auction process, which means every second you're going to see that some sort of trade is keep on going to happen in the markets, right? So the price will be keep on ticking up and down. And right now, if it is showing green, that means it is hitting on the sell, buy side. The buyers are the one it's hitting. So price is at 2510.3.90. And you can see the price pushing up means somebody had pushed the market order over here with so and so volume quantity. Again, more market orders are coming in. So market orders are the one which is creating the price action, right? But what happens if the quantity is so large? When the quantity is so large, let's say like 900 quantity, as long as somebody is not able to send more than 900 lots, the price is not going to go up. So practically when the liquidity is more, it's very difficult to cross the level, certain levels, right? So let's say right now the number is like 225. What if this number is going to be like 20,000? As long as the 20,000 lots are not going to consumed, the price is going to struggle there, right? So maybe if I want to give an example here, let's say I'll go to my drawing tool. So imagine this is the price level where institutions are defending. So how institutions they defend? They by sending continuous limit orders. They'll be keep on sending limit orders. You're not going to see big limit orders all the time, but they'll be keep on sending like an like an machine gun. They'll be keep on firing. So they will be sending an stream of limit order, stream of continuous limit orders. Imagine that level is going to be like 2500. So 2500 today, you're going to see a lot of institutional orders. So what generally it's going to happen is like it's more of a limit order, right? So limit order, it's more of a sell limit order, sell limit order. So the sell limit order is going to be their institutional intention. It's not they want to move the markets. They want to defend the market. They play the defense game. That's more of a defense, right? So practically when I try to use the price action over here, so let's say the price action, the buyers are trying to push the price action up. So when there is a continuous stream of flow of orders are there, it's keep on coming in. As I said, you're not going to see the big orders in one chart. You're not going to see 20,000 orders or 1 lakh orders. But any given point in time, you're going to see like 1,000 quantity, 500 quantity, 600 quantity. But once the quantity is filled, instantly again it's going to refill. So they'll be keep on refilling that mechanism. They'll be keep on sending in packets, right? So in that case, what will happen is like every time the price is going to come to that level, right, it's going to struggle a lot and it's going to go down. And it's going to come to that level and it's going to come down over there. So that is how the strong institutional demand or strong institutional supply will be created, right? The same thing happens on the downside as well. Downside, the institution, if they want to defend, they can defend with some sort of an buy limit order. They can place a continuous buy limit order using their DMA tools, right? And basically, they practically they can defend those such kind of levels. Now, this is one thing. Now, what are the second way I can use the FYERS market depth is like via APIs. So if you're having APIs, you can consider using this FYERS DOM analyzer. So this FYER DOM analyzer, using this, you can get a lot of interesting metrics. The same 50 depth you'll be able to see over here as well. And a couple of very interesting different insights I try to provide over here. You can also see it in number of shares as well. If you see like number of shares are pretty much bigger and you want to see it in lot size, you can switch to lot size, right? And it also gives you practical metrics like it also gives you total bid and ask levels as well, right? Which FYERS also provides. So FYERS also, if you go down, it will be giving you like the total bid and ask, total bid volume and the total ask volume, right? It provides. Bid is nothing but the buyer side volume, and ask is nothing but the seller side volume. These are like, bid is nothing but buyers who are willing to buy, but they're not moving the markets. Ask is like sellers willing to sell, but they're not creating any price action over here, right? So what, comparative to FYERS, what you can do is like you can build your own dashboard. I mean, this is practically we generated using Claude Sonnet kind of models, Claude Opus and Claude Sonnet kind of models. We built it, and we also kept it open source as well. You can also, maybe later on I'll provide you the GitHub link as well. You can go and try it out. So here you can see the complete metrics, but you can also have more controls over here. You can also see the visible quantity. This quantity, it shows the only the top 50 depth quantity alone. You can also get the top complete depth alone. This is complete depth, complete total bid and total ask. But if in case you want only the 50 depth, right? So if I'm a short-term trader, I prefer more looking into the 50 depth. Or maybe I can also switch back to, if I want to see the immediate levels, I can also see the immediate levels only, right? So this is like more of an immediate levels. I can also see the 20 depth as well. I can also practically go and see the 50 depth visible quantities as well. Now, it also gives me the depth distribution metrics as well. So top 5 levels, how much volume is getting distributed, right? So whereas top 10 levels, how much got distributed, and then you can see like remaining levels, remaining like 40 levels, I can see like almost like 9.8%, 10% of the market depth I'm able to see over here, right? And I can also see it within price level activity as well. So price range. So within this price range, you can see like most of the volumes are getting traded over here. In this range, this is a volume which is getting traded over here. So this could be useful tool who are looking for a range kind of mechanism where they want to see, if I'm a big trader, let's say I want to see where most of my liquidity is. So I can consider whether I can place market order or not. If I'm going to send my market order, let's say like 6,000 quantity, I know that most of my orders are going to get a fill in this range. So I can easily go and place a market order over here if I'm a big trader. So such kind of bifurcation it provides. And also one of the interesting HFT metrics, high frequency trading metrics, is like almost even many HFT traders, they do use order book imbalance analysis, particularly to predict the short-term price action. So I'll also talk about that, right? So you can also do ChatGPT, or you can ask your own AI tools. You can try to understand what an order book imbalance is all about. So this order book imbalance also provided, this metrics tell you what is the current market mood, what is the current market sentiment, immediate market sentiment, what it is exactly trying to do, right? So you can see like right now some sellers are dominating over here, right? So that it shows whether the buyers are dominating or sellers are dominating in the order book. You will get to know about it. Practically, it gives you more insights about it, right? So these are some very basic dashboard, but we've been keep building it. Whenever we find some time, we'll be keep building this FYERS HFT dashboard metrics, and it's practically available at GitHub. You need Python to work on that, so maybe you can just go to this particular link. So from here you can go and download it. So it's under AGPL 3.0 license. Means anybody can download freely. They can connect with their FYERS API key and API secret key. So probably there is an yeah. So here you have to go and enter your FYERS API key and API secret key. So FYERS API key and API secret key, if in case if you want to get, you can go to myapi.fyers.in. So from here you can go to your dashboard, login, and then you create an app, right? So, and then you have to follow the procedure which is mentioned in the documentation. So as per the documentation, you have to configure it, and you can start using the concept. So you have to set what symbol that you want to monitor, right? So practically you have to tell something like, I'll show you. So this is how the backend looks like. So it'll be keep on fetching the real-time codes. So here you have to tell you have to enter your API key, you have to enter your API secret, you have to enter your redirect URL, and what symbol that you want to monitor, and what is the lot size. So this is some of the basic setting that you have to do, and then you have to start the application, and you log into your FYERS, you'll authenticate using your FYERS login, and then you can start using this simple HFT dashboard. But as I said, it's right now it's a very basic metrics, but very soon we will be extending it to a very greater metrics going forward, right? And yes, it's available at free of cost to everyone. So there is no charges, no nothing they have to pay. So as long as you're getting the FYERS HFT data feed, you can practically make use of this. It's a very interesting tool to increase your screen time, I would say. And anyways, coming back to the context. So this is order flow. An order flow will be more or less looking something like this. So many people's question is like, what does an order flow shows? An order flow shows what it also shows the executed market orders. So you can see like when the price is moving up on the buy side, you will be seeing like quantities are getting added over here. In order depth, what you will be seeing is like your buy side will be on the left hand side and sell side will be on the right hand side. That is in market depth. Whereas in order flow, you will be seeing completely differently. So you'll be seeing like order buy side market orders will be on the right hand side and sell side orders will be on the left hand side. So if you see that when the prices keep going down, and which you can clearly see that the sellers are pushing the price down. So order flow shows executed market orders, whereas order book here, it shows the visible quantity over here. Okay. So maybe I can also show like how you can go for an options. Let's say something like I want to look into 25,100 options. So you can go and search for Nifty 2500. Let's say you want to look into the put option, just open the charts, right? And then you'll be able to practically can see the liquidity over here, right? You can able to see the liquidity over here. Now, talking about order flow imbalance ratio. Now, what is so interesting about order flow imbalance ratio is like it is a ratio of it's a simple formula, right? So bid quantity minus ask quantity divided by total bid quantity plus ask quantity. Now, how do we measure this? It's very interesting. So we have multiple order book metrics. You can see like 10 level imbalance. So top 10 level bid quantity and top bid 10 level ask quantity, we take that numbers, we add all those numbers in the only in the top 10 depth. So let's say top 10 depth, here's top 10 depth, right? So top 10 depth, I'll add all the buy side quantity and also the sell side quantity, and then I'll be applying this simple formula over here. I'll be applying this formula, and that is how I'll be getting the ratio. I multiply by 100. So when I multiply this by 100, I'll be getting this range. So if you are getting usually the value will be fluctuating between plus 100 to minus 100. Plus 100 means it is only buyers are there. There is no sellers at all in that depth, whatever the depth that you are monitoring, right? So plus 30 to 100 means strongly bullish pressure. Plus 5 to plus 30 means mild bullish pressure. Minus 5 to plus 5 means it's kind of a balanced neutral market, sideways markets. Not much of a liquidity is there. Buyers and sellers are almost equal, right? So there is no differentiation over there. Calm markets, typically calm markets will be having this plus or minus 5, and most of the time mid of the day you might be seeing that the market will be in the range of plus 10 to minus 10, but market will be getting, when markets are getting more directional, you'll be finding a very good order imbalance that you'll be finding over here. So now you can see like immediate metrics are like kind of whipsaw, but if you could see like the order depth is like kind of 30 to minus 13, it's like little bit of mild intensive pressure is what it's there, mild intensive selling pressure is there. But if at all the immediate numbers are getting like minus 50, 60, 70, then you should be on a high alert, right? So even if the 20 depth imbalance also suddenly it is increasing, or all across all the imbalance, you are able to see some sudden jump in the metrics. So that will be telling you that some serious traders are trying to control, or maybe some sort of iceberg orders are coming in, right? So something like that, you'll be able to you can use this simple tool to monitor it. Like so, practically, you can use this tool for a very short term predictions, right? And of course, you can also search for something like if in case you are really curious, right? So you can go for like order book. You can go for order book imbalance ratio, and then you can search for research paper. You'll be finding tons and tons of research paper about it, because earlier only HFT players they have access to these kind of tools, but now these kind of simple metrics, even a retail trader can build it. So what exactly it is and how we can make use of this. So how we can play these imbalance strategies, right? Of course, a little bit of screen time is also required to understand these concepts. But the key concept is earlier what HFT can see, now a retail trader also have that kind of metrics. Earlier, this kind of simple metrics which has the very short-term predictability patterns, which you can find in these order book imbalance. Now retail traders also make use of this, right? That's my point here. Now, apart from order book dynamics, right? You can also see like as the price is also nearing, let's say, as the price is nearing the depth, very close to the market price. When the price is very close to the market price, you're going to see like the volumes are going to be very lesser. But as we are going to get wider and wider and wider, the volumes will be getting bigger and bigger and bigger and bigger and bigger. So that is how the traditional order book dynamics looks like. So probably, if I want to explain with the diagram, let's say I'll go to the diagram here. So just think about that. You are seeing this is your current LTP. So imagine this is going to be your LTP. I'm going to draw a dotted line over here. This is where my current LTP is. LTP. So imagine I'm going to draw an volume over here. So as the price is going to go away from the LTP, right, your order book depth is going to increase. This is a volume activity. The volume will be more higher, very far away from the LTP. Very near to the LTP, the volumes will be lower. You'll be finding lower volume. And as you keep moving higher and higher, the intensity of the volume will be pretty much higher. Like you'll be facing like higher volumes at higher levels. So higher volume on the sell side, right? So higher volumes, practically the sell limit orders will be placing more higher volume over here. Likewise, on the downside also, right? So on the downside as well, you'll be finding something like this, right? So you'll be finding a higher volume as your price is moving away from that levels. Now, which is what exactly the order book depth metrics is also showing it to you. If you could see the depth metrics over here, so very near to the top 5 levels, which is very closer to the LTP, you'll be finding like only 0.4 percentage of the orders only it is sitting over there. Whereas the top 10 levels, if you're going to look through that, you will be finding something like 1.2 percentage of the volumes you'll be finding over here. Whereas remaining levels, if you could see like 8.5% of the markets. So it means the depth is, the volume of the depth is getting more and more increased over there, right? So that is, which practically you can visually see it if you are using the FYERS HFT dashboard. And of course, you can also see the visible quantity as well, which I already showed you. Uh, FYERS, Jeffrey, I think more or less we had done with the setup. Like how you can practically, you can start using this tool is like, so first thing is like you have to start looking into the information, right? So you're not gonna grab the information on the day one itself. So first thing is like you have to start reading market microstructure. So that is something that I would like to say. So if you are practically new to market microstructure, that is, you can go to Amazon, get a book on market microstructure, which will give you a pretty good idea about order book dynamics. Almost every quant in the industry, right, HFT or anybody who is working in JP Morgan or Goldman Sachs, traders, dealers, mostly if they want to get a pretty good idea about the liquidity, then they should read the market microstructure, right? And that will give you a pretty good idea. And then try to read some research papers, so mostly HFT papers. If you're a coder, try to build some dashboard out of it, out of that research paper, right? So now it is practically, it's pretty easy to design such kind of metrics using ChatGPT or Claude Sonnet kind of models or Grok kind of models. Very easily you can build it. Yeah, so that's one of the key takeaway over here. And now the last and final, like how I can practically use this is like, think about this. This is like last Monday's price action. Now, last Monday's price action, what maybe I'll try to get the complete video out of it. Like I've taken the screenshots for this. 。 . 。 . 。 . 。 . 。 . 。 . . 。 . 。 . 。 . . . 。 . . . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 . 。 So this is like last Monday market depth. So this is what I have take the screenshot of the metrics over here. The moment the market started, you could be seeing like 25 or 163, right? So you can see like one thing, if you would have seen right from the beginning, right? You can see like the buyer orders are very much lesser over here, right? And then sell orders was very much higher. So what does that means is like you might think, oh, sellers are more, that's why the price is gonna go down. It's not like because of sellers are more, the price is gonna go down. Sellers are just placed there. They're just controlling the market. They are trying to create a resistance, right? Because the buyers are very less over here. Buyers at that instance are less. That's an indication that there is not much of an uh, buyers are there, so sellers are able to easily push the market down. So first 1 hour is all about price action. If you would have seen Nifty futures, right, on a daily basis, the first 1 hour it creates 120 to 150 points of price action. So practically, you can see that when the quantity is lesser, right, I'll try to run it. It's running at a market speed. As you can see that when the price is running down, you can see that very slowly it will keep on coming down as the price keeps on coming down over here. Now price is like 142. This is like around another 3 minutes away from the markets. So price went 20 points down, but still if you could see the price action like 48 here and 8, 13, 18 over here. So let me repeat again, markets are not coming down because there are more sellers over here. Markets are coming down because there are very less sellers and more sellers are defending the levels. They are not creating the price action, but they are defending that level. So this sort of some sort of understanding needs to be happen over here because that takes a little bit of settle down time. Why these numbers are bigger, why these numbers are slower. So what could be the end impact. So those kind of analytics you can be able to do. So in a strong trend day, you're going to see this throughout the day, you're going to find this pattern over here. So as you can see, the markets also started sliding down. And apart from that, again, very slowly the price action came down. It's not like one shot price started coming down. Initial first 1 hour, if you would have seen that, the price was slowly coming down. So whatever I'm showing you is like first 1 hour of price action, like first 45 minutes of price action. As you can see, the very price is slowly getting down. Buyers and sellers are competing against each other, but one thing is very stable. The 54,000 quantity over here, and then 29, 32, even if it sometimes it comes to like 40, 45, but it still started suddenly start getting down, right? So that you can see over here. It's not an usual scenario, but only in a strong trend days, you're going to see this kind of pattern over here. Continuously, the sellers will be on the upper hand and sellers will be keep on defending their higher levels and buyers will be like kind of a weaker hand, very lesser interest from the buy side liquidity. So sellers know they have maybe they know that markets are going to go down, so they don't want to engage much on the buy side, but particularly market makers, they don't want to engage on the buy side, but they would like to do business more on the sell side because market makers, right, they do interact on both the sides. They're like banks. They also give the bid rate also. They also give the ask rate also, right? But when they know the sentiment, what they tend to do is like they tend to do more business on the sell side and they try to do less business on the buy side over here, which is practically evident on that particular day. Right. So this is like last Friday's price action of Nifty future, July contract. So as you can see that as the prices keep going up, you can see the price action remains the same. Every tiny pullback in the markets has been got sold out. So whatever you're seeing is an 1 minute chart, right? As over a period of time, you can see like the price keeps going down. One thing, it comes pretty closer, but then suddenly it get back to the normal state again. The buyers are getting lesser compared to the sellers, and that happened throughout the day. It happened. Maybe in the last 1 hour there has been some recovery. That time it got changed. Right now, if you look into the markets, let me show you right now what is happening here. Right now, today we are seeing a mixed emotions is what we are seeing over here. Markets are keep moving up and down. Yeah. So if you could see that, I'll switch to the total uh, number of shares. So if you're going to look through the total number of shares, I'll change it to 50 depth, right? So you can see like 42. And morning, if you would have seen that the buyers are more, sellers are less. Now we are seeing the exact opposite scenario. Like the things has been changed over here. Now sellers are more and buyers are less, and markets are. I think markets are coming down, right? So let me go back and get the price action here. I'll go to the Nifty future. Yeah. So here is Nifty future. I'll go to 1 minute chart. So markets has been keep coming down. So when the morning session was there, practically, if you would have seen that the total number of buyers are more than the sellers, market went up because there are less number of sellers. So markets has a easy path to move on the upper side, and now the price actions keep coming down, right? So uh, there's a shift over there. But last Friday is not something like that. Majority of the day, the sellers was high and the buyers quantity is like kind of lesser. So that way you can understand the change in market dynamics. You can able to easily able to understand over here. Now, yeah. So what I would recommend, the key takeaway is like go back, experiment, try to gain some more screen time, try to understand order flow, try to understand order book dynamics, try to read some research paper, try to read some HFT research paper. If you don't know, ask ChatGPT. That's how your learning curve takes place. Yeah.
There are just some couple of questions
Yes.
that we can just take right now. So one person's asking where and how could they get the historical data?
So historical data is like nobody is going to provide you, but from the broker, if you're good enough in Python, or you can hire a Python programmer, and you can collect the historical data, right? So practically, you have to store the historical data. You can use a database like QuestDB or DuckDB kind of database. You can use it for faster data ingestion. You can store it and you can replay back. So that is how it works, right? Because it's a huge data. Maybe if you're going to go to the exchange, exchange will cost you, they will charge you a bomb. So that's will be in lakhs. So it's very practically, even a 6 month of data feed, you will not have an, you need to have enough data storage in your hard disk, which is very practically difficult to store because the amount of data is very huge. So a lot of data. So maybe within a, let's say I'm going to record this data for like, imagine I'm going to record this data for like some 5 minutes. I'll be end up in uh, hundreds of MBs of data is what I'll be end up getting like every 5 minutes. Imagine I'm end up getting like 100 of MBs across all the exchanges. But I think FYERS provide, you can access up to like 5 instruments at a time. You can download it and you can record it. Maybe Nifty, Bank Nifty, or some other stocks that which you are monitoring. So those things you can use it to, you can record it, but some reasonable coding experience is required.
Okay. Somebody had a question regarding the book that you mentioned for the market structure, and also if you have any recommendation for order flow.
See, order flow, right? It is a study which has been evolved only from 2001 onwards.
Okay.
So everybody is having their own screen time experience. Now, I've been using market profile and order flow kind of tools since 2012 onwards. So I practically gained my own screen time experience, right? So there are no books as such, but since it is more of an, it's not an lagging indicator or leading indicator, it's more of an right now indicator. Even the market depth, it's not right now, it's showing what is happening right now in the market at this instant, what is happening right now. So that's what order flow and order depth is gonna show you. It is neither a lagging indicator or neither a leading indicator, but it's more of a right now indicator, right?
And
So
yeah,
to
somebody
answer
else
that,
is,
the
yeah.
basic, if you want to learn, if you want to understand the order book dynamics, or you want to understand order flow also, there are no direct books for order flow, but the market microstructure books. Practically, you can go and find it in Amazon. There is an Indian edition is there. Try to go and read it. A lot of editions are there, but try to read an Indian edition. That will be more user friendly. Pretty boring book, but it's not going to teach you any strategies, but it can give you a complete idea about how the exchange works, how the technology works in the exchange, how the order matching works, how the order spoofing works, or how the HFT traders manipulate, how the iceberg orders works, how a large trader, how a big trader they arrange large trades, how an institutional trader they arrange trades. So if you are having that kind of questions, if you are in the journey of searching where is the smart money, and you want to all your myth, whatever that you think that you are having, right? We might be having an idea about support, what is resistance. If all those myth has to go away and practicality has to sustain, then market microstructure is one thing that definitely I would recommend.
Okay. Another last question is on the Nifty option chain, does the 50 depth, can it show a support area where the price is coming down based on the existing orders that are there on the thing? And is it based on the 50 depth?
See, you can also see the 50 depth in the options as well. You can also see the 50 depth in the futures as well. Now, what I would recommend is like if you are trading Nifty options, then it's highly recommended that you watch Nifty futures order depth, because what Nifty futures is doing, the options are nothing but a derivative of it. In fact, Nifty futures represent almost Nifty spot, right? Nifty spot, there are no buyers and sellers. So real buyers and real sellers, they trade only Nifty futures only. So you can use Nifty futures as a proxy, and based on that you can trade in options. What you should not do is like directly looking into the options for taking buy or sell decisions.
Right.
Who should look into the Nifty option 50 depth is like, maybe if I'm a large trader, I want to place large amount of quantity and I want to know what is my market impact range, or I want to decide my market impact range, I want to wait for it. Such kind of people, only they should look into the Nifty options market 50 depth. Rest of the people who are looking for execution, right? So they are looking for signals from the market depth. They should be looking into the futures, or they should be looking into the equities. But equities, you have to be very careful, because whatever the numbers that you're seeing, they're not the true representation. You will be seeing only the visible orders, but the hidden orders will not be shown to you unless it got executed. Once it got executed, you're going to see that there has been some hidden orders has been there.
Okay.
Yeah.
I just have a couple more questions. These are going to be like just quick, short, where you can summarize it into probably one-liners.
Yeah.
Um, so most traders only see price and volume. So what are they missing out without market depth or 50 market depth?
So I would say like the context they are missing over here, the market sentiment they are missing, and probably the majority of the traders in the markets, right? They are price-based traders, or the majority of the traders, they look into the price breakout trading. That's what 80% of the trading community does. I'm not
Okay.
saying like breakout trading will not work, but breakout trading is very difficult most of the times, even with a very high chance of win rate, a very high chance of making money, right?
Right.
Everybody want to do that because it is very lucrative. But in the markets, right, you will be finding something called there is a price discovery process mechanism. Market never moves in a straight line. For example, will be market trying to keep on moving in this. This is very rare. Probably this kind of price action happens only 5% of the time in the markets. 5% of the time.
Oh,
Majority of the time, what market does is like it does an two-way auction process. So market moves up, again comes down, again moves up, again comes down, and it creates the point of control. Probably you would have seen like volume point of control, which is also available in FYERS trading view, I believe. So market will be keep on taking and it start rotating around a magnet. This is what it happens 70% of the time, 65 to 70% of the time market is not going to do the breakout. Most of the breakouts are going to be a fake out most of the times. This is where
right.
majority of the traders they got stuck because they don't have a pretty good idea about price discovery process. Because of the price discovery process, almost every institutions they come and trade in Indian markets because price discovery mechanism exists. So price discovery is like market is gonna take an center point which is considered as like kind of a fair price. It's a fair price, right? Which
Correct.
market will itself discover. The institutions will come and trade because such kind of fair price exists. This is a zone where majority of the institutions they like to place their bets around these levels. Most of the time they around this level is where most of the institutions they will be either accumulating or distribution. This is a zone where institution will be using it for accumulation or distribution.
The next one is TBT data is institutional grade. So how is FIRES offering this to retail traders?
How is FIRES offering to retail traders?
Like from your perspective,
So
how if you could just summarize it for our
See, as I said,
viewers.
like the top five levels, if you take top five levels, right, practically exchange provides it free of cost to all the exchange members in the sense brokers. But if you want level 3 or TBT feeds, you have to pay money from your packet. Basically, practically brokers are taking the chance. They maybe buyers, they want to showcase that top 50 depth, which is not available to the retail traders. So they would have, I'm sure I already interacted with the FYERS team as well. So they had a very strong uh, uh, push towards the technology. So what is not available in the market, they want to bring it to the retail traders, right? So I think practically now after 50 market depth, the HFT dashboard things kind of things happen. Otherwise, I would not even imagine about that I can create a HFT dashboard in my life. Right? That's
Yeah.
something crazy about it. Yeah. So and thanks to the FYERS team for providing the 50 market depth. So I think probably like for NSE exchange, it's if you go back and check, they might be charging somewhere around like 45 lakhs plus GST for NSE and NFO another 45 lakhs plus 45 lakhs plus GST. I think practically, I think it's 1 crore of investment. It could be more than that because it's only for the data feed and infra and then support, management, building tools, development. I don't even know like at least it could be like at least the FYERS would have spent at least the running cost will be 1 crore if I'm going to take only the feeds, right? If I'm going to manage the infra, if I'm going to manage implement some people, practically the my running cost will be at least 2 to 3 crores every year. That's the kind of cost which is involved behind the TBD feeds.
Got
Maybe
it.
my number could be a very low estimate, but this is what, from my experience, I'm just trying to put a round numbers over to it.
Yeah. All right. Thank you, Mr. Rajendran. And thank you for all of us for joining us today. We hope this session helped you look at market depth in a whole new light. So, from understanding the L1 to L5, decoding TVT data, to spotting real time patterns in the order book, we've covered a lot of ground today. And a special thank you to you, sir, for breaking it down so clearly and showing us how retail traders can now access tools once reserved for institutions.
Yeah.
So, to our viewers, if you're planning to level up your trading game, market depth is where the edge begins. So, until next time, trade smart and stay sharp.
Yeah. Thank you, everyone. Thank you, FYERS and Naresh and Jeffrey for providing me this wonderful opportunity. And thanks, all you guys, for your wonderful time. Thank you. Bye bye.
Thank you.